The Paris Air Show is underway, and it looks like it may be a major win for General Electric. The company told Yahoo Finance it booked $24 billion in orders for engines and services on day one of the show. That includes the largest engine order ever of $20 billion with Indigo Airlines. But it doesn't stop there. The company says it expects orders of at least $35 billion at this show and will likely see a final number north of that. Joining us now is Gordon Haskett, Senior Analyst, John Inch, and Yahoo Finance's Editor-in-Chief, Andy Serwer. Thanks for joining us, guys.
Good morning.
So, John, I know you've followed GE for many, many years. What's your take on some of the news out of the Paris Air Show?
Well, it was always expected that the talking points coming out of the air show were going to be very positive, and that GE was going to, it's the world's predominant aircraft engine supplier, and it was going to book a lot of orders. So there's really no surprise in that regard.
But there was no mention of the 9X, that GE engine, that the problems with Boeing. No surprise there that they didn't mention.
No, I mean, these are going to be positive talking points, right. A bit of an infomercial for the company. They're not going to start talking about challenges. They're not going to talk about the 737 MAX grounding or some of the cash costs associated with that. So no, this is a bit of a razzle-dazzle opportunity for these OEs and the suppliers to put their best foot forward and make it look like things are very upbeat. That said, I mean, global traffic is significantly slowing on the cargo side. China's a watch, in terms of the economy and how that's going to impact global traffic as well for aircraft. And, the China business is very, very important to GE. It's the predominant supplier of engines in that country. So, the question is, are we at a peak? And in fact, I think we, could be at a peak, particularly given sort of cracks in the global economy here.
Yeah, I mean, listen, just sort of bigger picture about GE, and the jury is still very much out. I know people are probably anxious to look for a point to jump into the stock. It's up kind of nicely this year, right? But to me, understanding this business, what its core competencies are going forward, is still very much up in the air. And when you look at times when companies recover like this, there is still plenty of time to get in. Right now, for my book, this is still way too murky a picture.
Mm-hmm. John, last fall, the credit rating agencies really hammered GE, and I was reading one of your recent notes. If they come out and downgrade the company again, they might be insolvent.
It's highly likely that would happen, although GE has privately said that the credit rating agencies are happy or comfortable with their liquidity plan for the next 18 months. So I think that's actually bought them a lot of breathing room and time. Before, even just a few months ago, they were literally trying to sell everything that wasn't nailed down. Mm-hmm. They did a deal with Danaher, kind of a bit of a fire sale deal to sell their biopharma business, which was a prized asset below really market valuation. Some of that talk has been backed off, and we think it's because the credit markets have more or less acquiesced to GE's plan. That doesn't say they're out of the woods. They have in excess of $100 billion of debt and lots of contingent liabilities and other investigations and issues. So, it really kind of comes back to the fact that if you're looking at this objectively, the aircraft engine business is really the only business that's what the whole thing is sort of supported by, right? Between the capital company, the power business, the wind business that's going to lose money. I mean, there's a lot of problems in this portfolio. And, people run around and say, well, let's just value aircraft engines independently. Well, you can't do that. The industrial company backs all of the debt and contingent liabilities of the entire corporation, including GE Capital. That's a black box. You just can't separate them, nor can anyone do a deal with GE the way United Technologies and Raytheon have come together. So a lot of it are just sound bites, but it doesn't take away from the long-term struggles this company is going to have to be faced with.
Larry Culp is trying, right?
Company still has, market cap of $90 billion, right? So, it's not a teensy-weensy thing, but it's got some major, big-time problems. And, I just get back to this thing, and John's sort of addressing it. What is GE going forward? It's the engine business, but then does this market valuation support that? And then how's it going to grow from here?